Hello guys, I hope I am not too late. Okay, it's like 10:04. So as you can see, we have seen that the whole December it was quiet, but in January things began to show. Okay, maybe good news, maybe bad news. So understand, Dorian Gray, how are you? The market is slowly taking my money, dude. Dorian, it depends which stock are you in. Okay, some people are making money, some people are losing money. For example, this week our trading account from last week, it was about 15%. This Friday it goes to 29%. So Dorian, it's you where you are in the market. So the market doesn't take your money, it is you buy losers. That's why you lose money. Okay, so guys, understand that this January, as we have seen last week, with the manifestations or with the Republican guys and to the Capitol, and the chaos that has never happened in USA, that some people they go to the Capitol and go inside in order to stop the Senate in order to proceed with Joe Biden as a president of the United States of America. You see the news, but I am sure that this January will have some good and bad news. And as always, when I speak about Wall Street guys, they try to have the opportunity either to push the market too much and we begin a new trend, or we will have a correction. So we should just wait and see the events. But understand that Wall Street can hit at any time. I said this in December, and in December was so quiet, although we have news. For example, the news in Wednesday, okay, but it doesn't seem to have an effect on the stock market. It's just because Wall Street, they don't want to do it as obvious. Oh, there is bad news. We should go and short the market. No, it doesn't work like this. Wall Street always use a time where the people don't expect a bad news. Okay, don't expect a correction, and then when it hit in 1 day or 2 days or 1 week or 2 or 1 month, like what did happen, it's just something that it will happen. Now it will happen this month or next month or the other month, I don't know, but we are in a world where here in USA there are a lot of news, good and bad, and this will affect the stock market. Now there are in the stock market, what I mean is the general, most of the stocks, but there are some stocks which are not affected by this big bad news or good news, like IPOs. IPOs, we mean by that the new stocks that you see coming to the stock market. Each day we have a new IPOs, new companies, they get listed, okay? And some stocks they succeed, most of the stocks they don't succeed until 1 year, 2 years, 3 years, and then they go up. Some stocks they begin right and they make too much money, and we have seen in our trading account, we have seen the stocks, a lot of stocks like this, and we are following them, okay, which is an opportunity to find gold nuggets at the beginning of the IPO, okay. There is another stocks, or there are another stocks that all of you know, which are penny stocks, okay. Penny stocks, because they are very, very thin stocks, it means the volume is very small. They are very, very small companies. Now, there is scams, there is manipulation by some websites, some YouTubers, some websites, some big men. Okay, you can see them in Facebook, you see them on YouTube, you see them. They push the stocks up and down. Okay, and this is called manipulation. But you know, sometimes it is hidden. Sometimes people, they say, "Oh, I think that you try to invest." I see some channels. They bring a small company and they begin to boost it. Oh, I see. The fundamentals, and this company will do, and this will do. And the company is a very, very tiny company. It does nothing. Okay? But these guys try to convince traders that they should buy these stocks. And I find some of my students, they tell me, oh, that guy and that guy, they tell, oh, buy this because of that and that. I say, man, we find these stocks before these guys speak about them, because we see the chart. So the chart gives you everything. You don't need someone who explain fundamentals of a company, that what it does, in order to see the trend. The trend has nothing to do. The trend is clean. You can see it. That's why for me, I don't use fundamentals. I don't buy because Tesla is a good company, or Apple, or Facebook, or any other company in America. I don't buy because they are famous. Okay? I buy because I see something good in the chart. Hello, Pillsbury 2DJ. How far down you set your stop loss? Okay. Your question about hello, Auntie God. Man, listen. Listen. I see you have come here before. You come here before and you ask some questions. I don't like the anti-God thing that you have. Okay, no problem. So I will answer you, Auntie. I say Auntie only, because we are believers. We don't like this anti-God and anti. Okay. How far down you set your stop loss? Understand that for me, I don't use what we call a percentage. I see the chart and I see where I should exit the trade according to my risk tolerance. It has nothing to do with the market, with the chart. It means with the percentage. And then when I put, let's say the stock is $20. Let's say I think that my stop loss will be, for example, 19. And then I say, okay, my stop loss will be 1%, 2%, or 5%, or 10%, or 20%. It depends on stocks. Stocks are not the same. There is no one rule. The only guide that you should have is your own tolerance. How much you can afford. Okay? Some stocks, when they go down, you should not let them go down too much. And some stocks, you let them. It depends on this kind of stocks when you see the chart. And I have training. So if you are interested, to DJ, if you are interested, there is a training how to protect your trades. You can check it by videos or by thing, and then you understand, and then you begin to practice, and then you send me an email, and we begin to do what we call a practice. And in my subscription, I always tell the guys where we should exit the trades. Now we have about, I don't know, I'm not exactly, I didn't say, we have about, I think about 13 or 14 stocks, because we buy and we sell a lot. So I always tell them each week, I tell them, okay, this is stock, if it goes here, I will sell, and I will explain to them why. So here, to DJ, I am not giving you training here, but I'm giving you general guidelines about the subject. Each week there is a subject. You can ask any question, but I don't train people here, okay? I train them in the subscription because people, they pay. You can't play only the chart. Yes, Auntie, since 2010 I began trading. I have never seen fundamentals all my life. What do you think about that? If you go to my trading account, you see me buying and selling stocks. We use criteria that it is typically the chart. Okay? Because the chart shows you where to buy. Because when you see fundamentals, you are an investor. An investor, you need time. You need time. Okay? A company, for example, you think that this company in the future will be something because it has ideas, it has products, and the sale is very high and it is growing so fast. Okay? Now here you are investing. Now when you are investing, you mean you need years. Warren Buffett said, if you want to invest, think about 20 years. Now, when he bought Coca-Cola in the 50s or 60s, until now he holds Coca-Cola because he knows it's a winner. That's why he holds it, and he has never sold it. He bought Geico, for example. He bought this and that and that. He bought lately Apple. Because he sees something in the future, that this company in the future will be bigger and bigger and bigger. For example, Apple. He has never bought technology stocks. He said before 20 or 30 years, he said, I don't understand these stocks, these companies, so I don't buy them. But he was wrong. And at the end of his life, Warren Buffett changed his mind about technology stocks. Because if he has bought Amazon and Google and Tesla and the other and Apple, he would have made thousands of billions of dollars more than they have now. But he said, I don't understand, so I don't buy. But he was wrong. So Auntie, I'm telling you the truth. I am trading the chart only. You believe it or not, you go my trading account in my subscription, silver or golden, you will see what stocks I have and how I trade. How I buy, how I search. It's all about search. It's all about. Now, when I buy stocks, understand that I see the ticker. It means the symbol. I don't know even what this stock is. I will tell you a funny thing. One time I bought a stock called WW2. Now, for me, I bought it. I hold it 1 month or 2 or 3. I make money. I sold it. I don't know even what this company is about. I thought it's about a big research company about history and about the thing, because I see World War, or it is something like that. But later, when I sold it, and I see the company, I see that it is the wrestling, company. About wrestling, about these guys. So I was astonished. But Does it matter that I know the company name? No. So, auntie, if you want to understand the trading, because when you say you can't only play the chart. For example, day trading. How can you day trade and you think about fundamentals of the company? You can't. Each second the stock goes up or go down. What's this fundamentals that you are relying on? So maybe you are wrong. You are thinking about investing, and this is another thing. I am not speaking about investing. I am speaking about the trends, because I buy stocks for a trend, up or down. But I'm not for 1 day or 2 or 3. These, if you want to, you can do penny stocks. Penny stocks you can do 1 day, 2 days, 3 days, 5 days, and then you exit very quickly when you make some money, because these stocks are volatile. They go up, they go down. So it's very risky, but you can do that. Okay? Sometimes I show my students, I show them how to search for these stocks and how to make money from them. Okay? Bobby 6 Killer said, I exited out of a plug Thursday. You think I should have stayed? Okay, I will answer this question. Herman Man say hello Kareem, hello Herman. Nasa, hello everybody. Okay, so let's go to this plug. I see this stock before, because listen, for me sometimes I remember the tickers that I have bought or sold or searched. Okay, so let's go to the chart. I will show you the chart, and I put plug, and then we can see. Okay, okay, let's go to the chart. As you can see, okay, as you can see here, guys, this is plug, as he told me. Now there is a gap up. There is another gap up. Okay, so in my opinion, you are right at some point, because let's say you bought here before the news 35. It goes to 53. So 35, we have 5, we have 15, we have $18. Okay? $18. It means you have made 50% in 2 days, for example, or you bought it here or here. Okay? So here it's a situation like a penny stock. Okay? Like a penny stock. It can go more up, because this is news only, because the people are good, or it can go dramatically down. So this, for me, I just explained to you in order to understand, this is not the trend. The trend is this one, because this stock, this is the trend. See? You see the trend? All this is the trend. This is the last days of the trend. It might collapse at any time, but it can go 1 day or 2. But this is a news. So here you are in a news. You are not in a regular trading thing. Here is trading. Here is a trading. The stock goes up and down, up and down, up and down, which is very good. But now it is the dangerous thing. So I don't know when you bought the stock, but you have done something good that you exit the trade. So The future, I don't know, because it depends on the people, depends on the news. So I don't know. But the stock might go down for sure. I don't know how much it will go down, but it might go down. Okay. Thank you very much for this question. Dorian Gray say, I don't set stop loss. I am a bit in Bitcoins. Now, listen, stop loss, you should think about it before even you buy the stock. It doesn't mean that you should put the stop loss as an order. No, stop loss, you can make it what we call mental stop loss. Before you buy the stock, you should know when to exit if things go wrong. If you don't do that, you are not a trader. You will lose some big money either in the past or in the future. Because let's say you see yourself that you are going to exit at 5%, just an example, 5% down. But if you wait from 5, it goes to 10, to 15, to 20, to 30%, thinking that the stock might go up. This is a beginner idea. You will lose a lot of money. And this is why most of the beginners lose money, is just because they stay too much in a losing position. Okay? So, for me, how I teach my students, how I do it in my own portfolio account, when I buy a stock, before I buy it, I know where I exit. My students, I show them. I say, okay, in our trading account, we have bought stocks. So look at them. Okay? That's good. Now, where we exit? We exit here and here and here and here for each stock. So at least the students, if they want to apply or they buy what I bought in my paper trading account, they know where to exit. At least they minimize their risk. Because trading is about risk. Managing your money is the basic thing in trading. If you don't know how to manage your money, you are over. It means it's like you are making 2,000 or 3,000 or 5,000 a month. Let's say you are, just an example, you are making $3,000 a month. Just an example. But if you spend $5,000, you will be down to $2,000. It will be a problem for you because you are down $2,000. Next time when you have 3,000, 2,000 are a debt. So what is left for you is only 1,000. And then you can't do nothing. You can't pay your bills, you can't pay your mortgage or your rent or your car payment. And then this is how the people, they get bad credit score. It's just they spend more they want when they earn. And this is the same as when you are trading. When you are trading, you should not lose that much in each trade. This is a basic thing in trading. Now, I can prove with any stock I show you in many trades. If you are like the first one here, like Dorian Gray, when he said the market is slowly taking my money, dude, okay? It's not the market that it is taking his money. It is you, Dorian, who give the money for free to the market. Why you let them take your money? If you see a position, it's a bad position, you should, before you buy, you should know where to exit and to lose little money. You should not lose a lot of money. This is a basic in trading. So that's why I am here. I'm here to give you general ideas. And then if you want to go into details, you have my training or you go to my subscription. And then you begin to study and to ask any questions that you have. That is theory and practice. Okay? And since you see my trading account is growing up, you will see that these strategies work and you know the theory and practice. Okay, so it's not people who are making money in the market. It's not just at random. It's not you buy for example, you buy a penny stock at random like this as gambling, and you buy it today at $1, tomorrow it goes $2. You say I have made 100%. But most of the people who do penny stocks, most of them, they lose all their money because you make 100%, but in 2 trades or 3 trades you lose 30%, and then you have no money. It's just because you don't know how to protect your money when you are trading. Okay? So these are what we call the basics of trading. You should know about them. Okay? Dorian said, I go in and out and get out. The market is annoying. No, it is not annoying. It's just because I see what you are saying. You go in and get out, and how many days? Are you doing swing trading? Or are you doing day trading? Or what's the thing that you are doing? Because I should know what you are doing before I answer you. Bobby Six Killer said, thank you, Kareem, for explaining that. Welcome, Bobby. But Bobby, you have done something good. Exiting the trade. Don't worry, even if it's going up more, don't worry about it, because it will go down. But I give you a suggestion. Next time, you can sell half. You can sell 75% of your shares, and leave some shares for experiment. It means if the market goes up more, you will be making money. But if it goes down, you just sell everything. But if you are in a big position, you are in 20,000, 50,000, 100,000, and you see big money coming to you, 50%. Try at least to sell 80% of your shares or 90% and leave 10%. Why? Because you will get all the profits, because the profits coming from gap ups. Because gap ups, they are in one day. In one day you make 40%. It's a lot of money. So you shouldn't leave this money for the market, because they will short it later. Okay? So understand this idea that you should not leave your money when you have a big position, especially in gap ups. Now, I am not speaking about the trend. For me, I don't sell when the trend is continue to go up, because the stock is giving me money. Okay? Okay? So understand that. But gap ups, most of the time in my own trading, most of the time when I see a gap up, 100% I sell my shares. Okay? One time I bought a stock 75. Okay? The next day, it was a drug company. I think they approve a drug or something. It goes to 135. In the morning, I see 135. I sold my position. But after that, it was going down. If I hold my position for many days, I could lose all this 100% that I make in one day. Why should I give my money to other traders who are selling short? I was long. So when the market gives you a gift, because gap ups in general are gifts from the market, you don't expect that. For me, for example, when I trade because of the trend. I stay many days, many weeks, many months. Before we bought Tesla, we bought Apple, we bought Facebook when they have the big trend, and then when the trend finished, I sold them. When the trend finishes, I sell them. So you say to me, when and how do you know? It's a training. So you should get that when you are with me. Okay? Dorian said, I use the chart if the market drops below an angle of the previous up bar, I get out. Now here, listen. Dorian, what you are using is very, very weak. Is very, very weak. Your strategy that you are following is very, very weak. Okay? Because when you see the chart, it's not because of one candle or two candles. It's something else. Okay? Dorian Gray, it's something else. And are you swing trading like us? It means you stay for a long time, or are you just for a few days? Because if you are few days, you are not doing real swing trading. Swing trading, you should follow the trend from the beginning until it finishes. There is a training how to manage the trend, how to follow an uptrend. I have a training level 8. It's called how to follow an uptrend or to follow a downtrend. It's the same thing. It's the same thing that you can do. It's just guidelines to show you how to stay longer and longer and longer when the stock is giving you money. But when the stock stops giving you money and it's going down, I exit the trade. I see it in the chart, so I exit. And I show my students how to exit, and they know how and why I exit. Okay? Steve M, how are you? Good evening, Kareem. Thanks for sharing your knowledge with us. Steve, thank you very much. But understand, Steve, that almost all my subscribers, especially 2020, almost all of them have made money, and this is the best thing. We have made about 140%. Now I restart my thing, I think in beginning of December. Now we are at 29% from I think from the beginning of December or end of November. We begin with a new account, and we set it to 0 because there's some people, they say, oh, I didn't see what you did before. I say, okay, you can go to the subscription and you can see how I buy and why I stay, because we have been into the trend. I will show you guys just very, very quick, when did we buy. Okay, so if you take Dow Jones, I will show you Dow Jones. Okay, let's show you Apple. Okay, at least you understand. So I will show you Apple. Okay. Okay, I will show you how the thing will work. Okay, look. Now, look at this. Now I know some of you, they don't believe. If I tell you that I bought here in this at the end of March, and I sold my stocks all in this candlestick here, 21st of February, before the gap down, I left only 2 stocks. I have about 8 or 10 stocks. I sold here. There is a gap down here, and then I sold 2 stocks here, and we got shorting. Now this is the coronavirus month when they think. Now from here, when we bought Apple until here, where I sold Apple. Now you don't believe? You go to my subscription. You see where I bought it and where I sold it. Okay? So you see, understand, guys, this is techniques, this is strategies that you should learn. And we buy from the bottom. And this training is training level 13. How to buy from the support line. Now, how to find this support line, it's not easy. You need a lot of experience to know when to buy and when not to buy. Okay? So this is just an example. Almost all the stocks have been going up the same. Okay? So this is expertise. It means to know the trends, how they begin, how they end. Now, when the end of Apple it ends, I just exit. And you can see, you go to my account, you find all these days where I exit. Okay, and I show you why I exit at that time. So all this stuff, guys, it is something that you should learn. And for me, I don't want to do just to send you stocks. Buy this here and sell this here. So you don't get training. Most of the people they keep their training for themselves, and they will never teach anything. Okay? So they send you stock. They say they go up. Some they go up. Some they go down. It doesn't matter. So, but for me, my objective is when I have a student or a trader, I show him all what I know. At least he will do like me, and then he can make money when he understands all the strategies and techniques. Okay? So this is the thing. You should learn. There is a process of learning, and when you learn, you understand, it's over. You do like me, and you understand like me, and that's it. And this is the good thing. 2DJ say, on a losing trade, can you buy the same stock right away? Yes. Yes, I always buy some stocks that I follow a lot. And even I buy and it didn't work, I will sell. This, sometimes it's very, very difficult to know the beginning of the trend. So you should bet on the stock. But I have my own techniques. So there are a lot of stocks that I follow since 2011. Facebook, Apple, Tesla. There are a lot of stocks that I follow. But I follow the chart. I'm not following fundamentals. What Facebook is doing, or what Apple is making, or Tesla. I don't care about what the people are saying, and they buy because they love the stock. No, I don't love the stock. For example, this year we bought Tesla at $750. It goes to $2,200. Okay? So it is just you buy a stock when the trend finishes, you sell. That's it. I'm not interested to know or to invest in Tesla as an investor. Okay? Because I'm doing trading. I follow the trends only. So you see the thing? I focus on the trends, regardless of the name of the company. I don't care. But when you know the company, the chart, it means you know the people that are trading. This is a good thing. Because understand that for me, when I see a chart, I know who are these guys, what they are doing. Now, I don't know their names. Who are they, like institutions or so? No, but I know what they are doing. Their hands is shown in the chart, without going to fundamentals and to see who has bought millions of shares and who has sold. No, I don't do that. Because my trading is so simple and so effective. I don't put my mind here. I don't put fundamentals in my mind. I am not an investor. I don't care about what Tesla do, cars or energy or making a battery. I don't care about this. But people, because all the people buy because of this news or this knowledge, for me, I follow the trend that I see. When it stops, I sell. Even Tesla is making more money, but if the trend is going down, it's over. It's over. People are selling short now. So if I stay, I will lose my profits. So understand, guys, that everything is about trading. It's not about fundamentals. I don't use fundamentals. That's why a lot of people, they say, oh, how you don't use fundamentals? I say, I don't need them. Now, you don't believe me? Come, do the subscription for 1 month or 2 months, and you see how I trade, how I buy, how I sell, where I put my stop loss. This is a training. At least you get an idea. Okay? And I have a history. Everything is verified. It means if you go and I told you, okay, I bought Apple in the end of March. You go to end of March, you will find the video, and I say, today I bought Apple at this price. Here is the chart. I will tell you why I bought it and explain to you. And then after 6 months, I sold Apple. I will show you. You follow the videos. I do videos each weekend, like a Saturday and Sunday. You see the videos. They say, okay, on Thursday I sold Apple. Why? Because of this and this and that. It's not because Apple is making cell phones or computers. I don't care about what Apple is making. For me, I am caring about money. How can I make money from Apple charts or stock? Because I am not an investor having millions of dollars in Apple like Warren Buffett. He has billions of dollars in it. I am not. So I just trade stocks. I flip stocks through their trends. Okay? No, don't think about this thing like wash out or something related to tax. Don't forget about tax now. Any money that you are making, you should pay tax. Except I told my guys always to use not to pay tax. They told me, oh Karim, how we don't pay tax? Okay. Use Roth IRA. Roth IRA, you don't pay tax. Each year you put money through the years. You make your account and then you trade. You take your money, you don't pay tax. You put your money again, you don't pay tax. That's it. It's a solution for the people who have no solution. But some people they don't do that, so it doesn't matter for them. So I just try to help as much with what is it? With suggestions. There are solutions to any problem that you have. Sometimes you don't know that this solution has a problem, that this problem has a solution. But I try to find solutions for every trading problem. Okay? You flip stocks like some people flip houses. Yes. Yes, but people who buy houses, most of the time, they buy from auctions. They buy so cheap, and they have knowledge about the market where they buy, and they fix these houses that are old or something, and it become good, and then they sell it. So, but for me, I'm not doing all this stuff. I'm not fixing anything because I don't like to fix anything. It's not my job to fix things. Herman said, "Can you check pay tax?" Now, listen, Herman. If you want to understand tax, you should go to your tax preparer, the man who do your tax. Even if you are doing it by software or something, but you need one time to go to a tax. Do it only 1 year, and give him his own information, and he will explain to you how these things work. Because for me, I am not a tax preparer. I have no idea about tax, so I don't go into details for something that I don't know exactly. But understand that there is something that you should understand. If you have an individual account, if you make money, you are buying and selling stocks. If you are making money, let's say you make $10,000, $20,000, $50,000, whatever money you make from your account, it is taxable because it is called. It's like a job. It's like an ordinary income. It's like a job. But if you do Roth IRA, which is your taxed money inside, So you put your money, you take your money from your account, no one will speak to you, because this has nothing to do with tax. Okay? But if you want to understand the better and better tax, you should ask your tax preparer to explain to you all this stuff. There is another thing. If you want to do trading as a business, you should go to your tax preparer, and you will ask for to make an LLC. It means to make a business, and then you can include all the things that you claim, like in expenses. It becomes like a job. It becomes like a business, and this is better. Even if you make a lot of money, you pay tax little because you include your expenses. That's why some people, they do it. I have some students who I showed them, and they begin to do as a business. Because if he make 10,000, 20,000, 50,000 each year, so he will not pay that much tax. But if he has an individual account, it will be like a job, like a second job you do. So any money that you make, Uncle Sam will see it, and he will take all your money. But when you do a business, he will see how much money you make. But the expenses that you tell him, he will accept your expenses because you are a business. So the money will be less and less and less taxable, and then you don't pay tax that much. So you should be doing business, or you should doing Roth IRA. You should have solutions into your finances. And if you go to YouTube, there are a lot of channels that they explain tax, explain all the things. You can check that, or ask a tax preparer to explain to you. Okay? NASA said he meant pay stock in Toronto Stock Exchange. Oh, I am sorry. No, TSX. Now, I thought it is because I'm speaking about tax. I thought he said pay tax, PAY, and I don't want to say to him, oh, you make a mistake in the E. So thank you very much, NASA, for telling me. I will say this. I will check this pay tax right away. Pay stock. Okay. Let's go with Herman. So you are from Canada, okay? So the ticket is pay. I will just give you my idea about it. So okay, look. Now the first thing you should look about, it's an ETF. An ETF, and it's about dividend. So that's why this ETF should go slowly. Can you compare? Now this, I will tell you. Can you compare this with Apple, for example? Can you compare it? I just give you a comparison to see the thing, okay? Can you see that? Can you see the downtrend that the market has done? Either in USA or Canada, I think it's the same. They have the same trend. It's going down. Pay was going down. But see Apple, how Apple is going so great. Now your stock is first, it is an ETF. Now see where there is a downtrend in as you tell me in Canada stock exchange. This is the downtrend that we have. Okay, But you see that this stock, which is an ETF, exchange traded fund, and it's about dividend. For me, I will never buy an equity dividend. I will never buy a dividend equity like this. And since it is an ETF, it is following an index, and you know the index is very slow. Although the stock can go on and up a little bit, going up, but it is too slow for me. It's too slow. And you see when it goes down here at the end of March, it doesn't even reach this high of this year, of last year. It didn't reach it. So it is still even 1 year. But if you see Dow Jones, now let's say we compare it to Dow Jones, I will show you. Now listen, see Dow Jones, it's the same, but Dow Jones has already go over the last year height. That's why this year is green. This year is green. If you put yearly, it should be green. You see this year is green. Last year was red. This year is green. Okay? But if you see Dow Jones, how big is the trend? It means Dow Jones is doing better than your stock, which is if you bought let's say if you are buying like USA index, it is doing more than. That's why I told you here it's not going over last year high. See Dow Jones where it is. It's doing great compared to your stock. So your stock in general, it is weak. Okay? I don't know for how long have you bought this stock, but how many months or how many years you have this stock. So at least I can give you another explanation. Because are you investing? Are you trading? Swing trading? What are you doing in this ETF? Okay? So when you tell me, I can speak more about this stock, which is pay in Canada. Now let's see GR. Sometimes when the ask volume is higher than the bid volume, price goes down. Why? Secondly, when buying stocks, do you research if an insider is buying in the stock you are going to buy? Okay, GR. I will speak about the second part, which is insider buying. Now, GR. Understand that when someone has bought 3 months ago, it's not right away they tell you. They don't tell you right away. The exchange ask big institutions or big traders who have a lot of billions or millions of dollars. They ask them to share what they bought, what they sold. And when you say insider, it means someone who is an executive or who is an influential person in the company, or someone who is an investor who has a lot of money in this company. He is like a shareholder. Now, when he sells or when he buys, he will report this after 2 months or 3 months. So for you, it's over. The stock has been going 3 months up. And then you discover that an insider has bought. So this information is useless for you. It is useless. Even sometimes when the company buys some of its shares back because they think the company is doing great. you should see this in the chart if the chart has begun to go up, and this is the trend, and this is my job and a job of any swing traders, or what we call trend followers. We follow the chart and we know who is buying and who is selling. We know that from the chart. Although, for example, for me, I don't know Apple, for example. Who are the people who are buying Apple since the end of March? I don't know. But for me, I have bought and I have made money. It doesn't matter who has bought or when. But I see when they begin buying because of the beginning of the trend. And this is the key for trends. But in order to understand this, you need a training. You need to understand how things work. It's not just stock go down, you buy it. It can continue going down for 1 month, 6 months, 1 year, 2 years, and then the company go bankrupt. So you will be a loser. Okay? So for us, when I buy, I bet on the stock, and this is a risk, like anything you do in your trading. Whenever you bet on the stock, there is a risk. Okay? The second thing you say, sometimes when the ask volume is higher than the bid volume price, no, it's the opposite. It is the opposite. When the ask, try to see it very, very clearly, because I don't know, because sometimes information they give you, it's not that clear. When the ask, we have a lot of volume. What does it mean? It means we have a lot of buyers. If we have a lot of buyers, the stock will go up. It's not going down. But this is in a day trading. For example, even for me, I don't see the volume. When I was day trading, I don't see the volume. I see the candlesticks, how they move. This is how I make my trade. I think I have a trade where I put 5 minutes time frame. I think I did it on Facebook on the chart. You will find the video in my channel. Put day trading or day trade. It will pop up 4 or 5 videos. I made them live on how to do the trade. It's a day trading, and I show that I don't use any volume. I don't trade the volume. The volume just showed to me how many people are there, because the volume, what is it? The volume has 2 things. For example, you see Facebook today, for example, it has 10 million volume, but you don't know how many million are those who bought and how many millions are those who sold. So the volume doesn't help make you money, because you don't know how many. But because if you put the volume buyers and buyers here, and shares that are bought, shares that are sold, I can know how the stock will be moving, and I will be making money because of that. But the brokers doesn't give that information. They don't give you the bid and the ask. It's not an exact thing, because some people they put to buy 1 million shares at certain price. You see the volume is very high, but in real they don't buy, they don't sell. So it is just a fake. Sometimes volume is just fake. So this is technical. It's very, very hard to understand. So don't focus on the volume. Focus on the price. If the price is going up, the stock is $20. It goes to $20, $5 cents, 10 cents, 20 cents, 30 cents. The stock is going up. The volume will follow. So I'm not caring about the volume. I am looking at the price where it goes. If it is going down, I sell short. I see that the stock is going down. Now you should have some techniques. Those techniques, if you are interested, you can see training 11, how to sell short a stock, or training 12, how to buy a stock, like in day trading, using candlesticks. I show you how to do that. But you need practice too, to practice, because this thing, it's not like a medicine. Some syrup, you are sick, you are coughing, you drink, and then you become okay. This is not like that. You should practice. It's like when you go boxing or doing martial arts or doing some sport, you need to practice in order to be good. It's not one night you go to the gym, you want to be a boxer, and the next day you go to Mayweather or to McGyver, or I don't know what's his name, or you go to Mike Tyson or Muhammad Ali in the past, or whatever. You can't. You need to do as they did before. It means they worked 10 years in order to be good. So you should do that. So trading is like any other business. You need to learn in order to have skills. When you have skills and you know how to trade, what do you need? You need money. Because it will be very frustrating for you when you want to buy stocks. You see that they are good, but you don't have the money. That's the biggest, the worst thing you can happen to you when you are a good trader. Okay? So thank you very much, GR, for your question. Peace pray to DJ said, when you say following the index, what exactly you mean? Now the index, it means the whole market, what it is doing. I will show you, because I think you are new here, because most of the people here, they know. So I will show you the index. At least you have an idea what do I mean. Okay, let's see the index, some indexes. Now this is Dow Jones. Let's see the daily. Okay. Now look. This is Dow Jones what has done last year. Before the last year, it means here. For example, here we are in 2019. Now the beginning. So I will explain this. At least you will say where is end of 2019. Okay. Now let's see this end here. As you can see here, this is 2019. The stock market has been going up. So what does it mean for you? It means that the majority of the stocks are going up. Most of them. Not all of them, but most of them. Now what did happen in January? The stock market has been going up in the whole January, beginning of the end of February, and at the end of the February we have the collapse, or the big correction in the market. Now and then in the end of March we have the big trend. So this gives you a general idea what the market has been doing. Now I give you an example of Apple. Is Apple doing the same as the Dow Jones? Yes or no? Okay. Now look at Apple compared to the Dow Jones. See, Dow Jones has been going down. Apple has been going down also in the end of February, end of March. And the Dow Jones have been going, this is the market. But when the index has been going up, it's going up slowly because it is an index. But Apple, You see how excellent it was. So you know here that Apple is doing better than the index, which is Dow Jones. That's why people, they buy Apple, they don't buy Dow Jones ETF. So this is something that you should look for all the indexes, all the sectors, all the industries. So this is just something that it is very important to know about. Now, for me, I explain all this in real. When you are searching for stocks, I will show you how we find the stocks, or when, or how, or what is there. Okay? Mike Kubiak said, hello teacher, I am late for class. Yes, it is just a general class. Your class is in the videos that I send in the weekend. So you are my student, so you know about this. Okay. True DJ said, what causes slippage? Now, slippage is caused by large volume of sold shares. I'll give you an example. Let's say the stock is $20. Someone has, like a hedge fund trader, for example, he has millions and billions of dollars. He wants to sell short the stock. So if he send 1 million or 2 million of shares sold short, the stock will not go just by 1 cent to become 19.99. So it will collapse, like it will be like 1995 or 1990. And this is called slippage. It means the stock collapse very, very quick, and it has other causes, but this is the main cause. Volume said, Dorian said, volume is just activity during the price range, and yes, you versus exchange that tries to beat you. Yes, the exchange has nothing to do with the thing. The exchange is just hold stocks. People are trading. If the people, they buy more shares, the stock will go up. If the people, they sell short, the stock will go down. That's it. Trading is very, very simple. But some people, they make it very difficult. So for me, it's just a simple thing. People are buying, you see the stock is going up, you buy with them. A stock is sold short, you see that it's going down, you sell short. That's it. But you need skills. It's not just you know this and you become making money. You need to practice. You need some good techniques, good strategies. That's what I do. Okay. Deborah Lee, how are you? Mike Kubiak say, so they move the price up and down a penny or two hundreds of times and a day, and it looks like a barcode scan. The MMS are profiting of this. Yes, the market makers are always making money because they make the market move up or down, and they are helping the market work. That's why the exchange, they give them the ability to make money. So mostly our brokers and are doing that. So it's people who are working for the exchange. Mike Kubek said, look at the 5-minute chart last few days. For instance, IBU, that one is notorious for barcoding. Now, for me, Miles Kubiak, I don't use barcoding or something, but 5-minute chart for the stock IBU. Let's see the stock. I have seen this stock before. Let me give you 1 minute. So this is the stock IBO, as you can see it. Now this is the daily. Now let's go to the last day, and we check the 5 minutes. 2 cents. This stock has gone only 2 cents. Now if you use 5 minutes chart, it's going 1 cent at a time. So let's see. This stock is not a way to show this. Now I will show you Apple is better to see these things. Okay? Look at Apple. Now, this is the whole day of Apple. Now, this is, for example, 5 minutes. The stock opens at 132.50. It goes down to 131.63. It means it's like $1, and then it goes up to 132.63, and then the end of this candlestick is $132.31. But see, from 132.50 it goes here to 130. So $300, if you have shorted here this 20 minutes, you could make $300. Now you buy again here, you can make $200. You go down, you can make $200 or $300. So if you bought from here, from the bottom, like a support line, from 130, it goes to 132. So you make $200. It means it depends. So the people are following these fluctuations of the day. And each candlestick is 5 minutes. Some they are very, very small, some they are big. Okay? So this is just to show you that if you are that's why I don't do day trading anymore, because I'm not going to spend the whole day doing this. So I just follow the trend. And believe it or not, if you have done this like us last year, when buying from the bottom, let's say you bought at 61, because the stock was not 61 by 4, because the stock has been here, it has been at 500. Now it shows 137. It's just because there is a split. But let's say it is the truth. You bought it at 61 and it goes to 137. You double your money this year. Last year, it means from end of February in Apple, you put $10,000, you make $10 more $1,000. You have 50,000, you have made 100,000. Okay? So that's it. How the people, for me, I follow trends to make the big bucks than to follow the day and to fight with day traders, which is not what I want to do in my life. So I was a day trader before, but I changed to swing trading, because swing trading you don't work too much. For me, if I tell you how many hours I work in the week, sometimes I work like in the week. How many I work? I work less than 25 minutes a week, or less. At the end of the day, I just see where my stocks are. Are they making good or bad? Should I sell a stock? Yes or no? That's it. The whole week. When I want to search, I search at 3 o'clock. It takes me like 10 minutes or 15 minutes to prepare the stocks, and then I check them, and then I choose 1 or 2 or 3 stocks to buy. That's it. But sometimes I buy a stock and 6 months I sell it. So I did only one thing, to buy and then to follow the trend. So that's why swing trading, it's easy. It's for the lazy people like me. So I like the lazy life that I am doing. I don't want to be like a day trader and to be in the morning following the news, following the thing. This Tesla, here is the news, here is the news. I am not into that. Okay? So guys, if you want to be lazy like me, do like me, man. Okay. So from the looks of it, you piggyback with the big sharks when they feed. You don't go against them like they say. Trend is your friend. Yes, man. You now, 2DJ, you have understood the heart of swing trading. You should not be against the guys that are bigger than you. They crush you. If a hedge fund has $5 billion, he go to a small stock and he hit it. The small stock is going down, and you are going long. You go long. You go against him. You go against the market. You are stupid to do that, because the market will crush you. And this is what the beginners, they don't understand. The beginners, they want to do what? They want to make sure they are right. No! Even if for me, if I buy a stock, I bet for the stock. I bought it according to my strategies. Now after a few days, I am wrong. I sell the stock. I can buy it next time, like 1 week or 1 month later, when it is favorable again. But I am not stupid to stay where the people are shorting the stock. If I tell you something, in the beginning of the coronavirus, beginning of end of February, end of March, I sold all my stocks and we begin to sell short. You tell me, for example, Karim, how do you know that? You go to my verified trades, and you will see what we did. And I say, okay, I'm going to sell short using inverse ETFs, and I have used some, and we have made money. And then when the trend has finished going down, it's going up again. We buy long again, and we make money. So it depends on in the market. You should not be against the trend, because they crush you. You are very, very small. You are not a very big guy like a mutual fund, and he's buying a lot from a stock. You can mutual fund can crush anyone, but I am not a mutual fund. I am just a trader. Okay. So thank you very much to DJ for this. Dorian said, when you buy the LAL robot is selling you for a markup price. When you sell the robot, it's not a robot. Dorian, this is not a robot. This is the market maker. He is a person. He has a software, and the software works according to the bid and the ask. So it's not a robot. Yes, it is the system, but the system behind it, there is a person who is called the market maker. Market makers are a lot, because the people who are selling, I will just explain this because a lot of people they don't understand. The only people who understand will understand me is those people who used what we call the. So I will explain this for those who don't know the bid and the ask. So this is the bid. I'm just giving you an example. This is the ask. I give you an example. For example, $20 is the bid, Okay, $20. Let's say it is 2 cents. The ask. Now the ask, who is behind the ask? Is the market maker. Market maker is a person. Person is selling. You here, for example, I buy from the market maker who is selling. He is always selling more expensive than the bid. Okay? And the market maker is here also. He is buying from you if you want to buy, if you want to sell. But in order to make money, he will buy, and you will sell. So I sell to him at $20. So how much I lose? I lose 2 cents for every share. For every share, I lose 2 cents. And this 2 cents is the money that the market maker makes here or there. And then when he buys from you, he buys at 20, he will sell it to someone else at 2 cents, and he will make 2 cents for each share. But understand, you say to me, for example, 2 cents is just very little. No, the market maker, let's say he do 100 million shares. Let's say he bought and sold 100 million shares. Okay? So 100 million, you multiply by 2 cents. Okay? You will see how much money this guy makes. So they are making millions each year, these guys. Okay? And for the bids and the ask, there is no only in bids and ask, because of the market makers. The market makers, when they offer you to buy, for example, XYZ at 22. There are some people who offer you, for example, 23. Some they offer 24. Now, if this is gone, another market maker, he will sell it at 2003. What does it mean? It means the stock is going up. That's why you see the stock. When you see the close, when you see the price of the ask, it's 22. And then it becomes 23. Then it becomes 10 cents. Because someone has bought a lot. And it is going up, going up, going up. This is how the market makers do the bids and the asks. And that's why you see that the market is going up or going down. This is in general how the thing works. Okay, at least you understand. When you say the robot, you mean the software system. Yes, it is a robot, but behind it there is a person. And each person is different. Each market maker, they are not having the same bid and ask. Okay? Some they give good, some they give bad. But depending if the stock is going down, some market makers make money. If the stock is going up, the market makers is making money. So they are always making money, these guys. Okay? Dorian said, if no one trades, the robot trades among themselves like New York Stock Exchange bots versus JP Morgan bot market. Now listen, Dorian, there are things that are done out of the exchange. This, we are not speaking about them. We are speaking about something that you see. If there is no buyer and seller, there is no volume. I will give you an example where a stock has no volume. Okay, let me give you an example Let's see, we go to we see some stocks and I will show you. Let's go to biotechnology is always good. Okay, let me show you a stock. $0.01. I will show you a stock that has low volume. It will take time. Sometimes the stocks that are new, it will take some time to find you one. Sometimes I find them very, very quick. Sometimes it takes time. Bear with me, guys. Okay. It has taken time. Normally, it doesn't take time. I don't know. Sometimes when we have IPOs, new companies, here I think the stock here has been sold or something. Here there is no volume, but this stock has been sold. It means the company has been bought by another. So there is no $2.47 for all the days. There is no buying, there is no selling. So the volume is zero. But I want to find a stock that has zero. It will take time, guys, because I don't have a stock ready. Most of the time, it's the stocks that are IPOs, and no one is trading them. Today is very... Yes. Look at this stock. I will give you now a stock. Let me see here. 200 shares traded a day. Yes, zero. Look at this candlestick here. On Thursday, 2nd April 2020, this stock, which is called RELVD, if you go to that day, there is zero volume. You can see it in red. Okay? Zero volume. So when there is a zero volume, the market maker doesn't work for that stock. But here you see the volume is 118,000. That's why the stock moves up and down. So here also we have 500 shares traded a day, zero. Okay? Zero volume here also on the 23rd September 2020. You go to this chart, the volume is zero. And here the volume is zero because the company is sold. Because whenever you see dots like this at the end of the thing, it means this company has been delisted. Delisted, it means this company has been bought by another one. That's why they take this RELVD. This symbol doesn't exist anymore. That's why there is no trading. Sometimes it is stopped by exchange for some problem. The company, sometimes they stop. So this is how things work. Okay? Mike Skubiak said, yes, I figure it. It's the algorithm bots trading when no retailers are trading because the volume is in the millions still. Al Hassan Qasimi, correct, Karim. a good explanation about robots. Thank you very much. Now, in general, we don't say robots. We say software system that the market makers are using. All they use systems to work with the exchange, because everything is online. It's like an auction. You need to have a system in order to work with the exchange, okay? Because everything is regulated, so at least we have no problem. Mike Kubiak said the real winners are the market makers. Yes, they are the real winners. It is their job. If you want to be like them, you should go to a broker and become market maker. Deborah Lee say why. I don't understand what you say why. Wow. Devin Frank said, should I buy SPY in my era? Okay, and Devin Frank, Frank, I don't give opinions on what to buy and what to sell. Okay, but if you are my student, I give you the training how to find these stocks, or you can follow my portfolio, and you can see the stocks that we are buying. You can buy like us, and that's what we do. But I don't tell you, buy an index. Or indexes most of the time are slow than stocks. Stocks are better than indexes, because the index is just a general average of many stocks. So there are the bad ones, there are the good ones, and we have the index average. So it's always slow. For me, I don't buy indexes. Devin Frank said, I sold my SPY at the end of the year because I thought it was going to backtest 365 area. Do you think it's bullish? Now listen, I don't have this idea of bullish or bearish. For me, I follow the trends. You should learn swing trading. Stop having this idea of bullish or bearish. Who tells you this bullish and bearish? You should see the chart. There are techniques. You should know where the stocks are going. Index or not an index, any stock. You should use techniques and strategies that shows you from the chart where the stock is going up or down, or it has a trend or not. It's not the idea of bullish or bearish. Devin Frank said, Dothrea is my retirement account. What is your class? So your account, your retirement account. So by class is subscriptions. Subscription, it means you subscribe. I have 3 subscriptions. I have golden subscription, I have silver, and I have basic. You should go, and if you are interested in investing, in doing options, in doing stocks, you should go to golden. If you want just the stocks, no investing, no options, nothing, you should see my portfolio, how I trade, how I search, why I buy, and each month when you renew, I give you the trainings for free. Each month you have training for free. This is basically how it is. Or you can use only the basic. It means I will show you how to search for stocks, but I will not give you other information on how to follow, how to sell, or to follow the stocks. No, I will not give that. So you choose what you want, and you can do that. Or if you don't want to subscribe, you can buy directly my training in videos or eBooks. You can just buy them, and you study by yourself, and you do that. If you want direct information, you should go and be with my students. And I will give you the website, because I always give at the end of the session for those who want to check. So I will give you directly the subscription at least you see what's going on. And if you have more question, I give you my email. This is my subscription page, and then I give you my email. You find it in all my YouTube videos, but I will give it to you. Okay. This is my email if you want to send me an email. Okay. So, and your retirement, which is very, very good, because you can take money, you can put back your money since you're in retirement. But how old are you? It means if you are doing stocks, it's a bit more riskier than index. But the index, in bad years, it can go bad. For example, if you see 2008, most of the indexes, most of the stocks have been down 50%. So everything collapsed. Stocks, indexes, everything collapsed. So if someone tells you it is safe, it is not safe. If someone tells you that buy index it is safer, it is not safe. It is slower, going up or going down. But in bad years, it goes so bad. Go, for example, check your index, for example, SPY, in 2008. You see how much it lost. I will show you. I will show you just an example to show you this. I will show you the S&P 500 in the years how much it go down. Now, here is 2008. It was 146. It goes to 74. It goes more than 55%. 55%. Okay? So if someone tells you that S&P 500 is safe, give him this year. Tell him, what about 2008? It was $147.53. It goes to 74. So are you telling me that it is safe? It is not safe. You have lost 55 of your money. If you have 100,000, you have already lost $55,000 that year. And who tells you that the market will go up? It can go down like this. Okay? Here it was 146. It goes to 77 in 3 years. So 3 years in the row, it's doing bad. So understand that there is nothing is safe. So get this idea from your mind that it is safe, or someone tells you it is safe. There is no safe thing in trading or investing. It's all you should risk. Now, to DJ say, how long have you been trading? Since 2010. 2010. SPAC have been hot lately. Special purpose acquisition company. Well, for me, as you know, NASA, you are my student. You know that I don't follow the reason. Why the stock goes up, it's not my problem. Because the reason, you know it when the stock has already been going up and it's over. So for me, you can't find this stock because of special purpose acquisition company or something like that. Sometimes there is acquisitions, there is mergers, and the stock is going down. So it's not a sure trade that you are going to do. Because there is a split, the stock go up. Because there is merger, stock will go up. No, this is not true. You can check many stocks, you find it's not true. Okay. Deborah Lee said, get 80% or 90%, leave 10%. That's the best advice. Thank you. What is this, Deborah Lee? What is this get 80% or 90% and then leave 10%? Ah, you mean how to trade? Now, trading has no... when you want to sell, the trend should be ended. So for me, I don't buy because 80% or 70% or what. I sell because the trend has ended. That's what I do. Devin Frank? Oh! You are 19 years old, Devin Frank? I thought you are 99 because you say retirement. I thought that you are old. It's very good that you thought about Roth IRA when you are 19 years old. It's excellent. But who tells you about Roth IRA? It's a very good choice because you will be putting money. If you want to take your money, no one will ask you to pay tax, which is very good and excellent thing. But since you are young, you can buy stocks better than indexes. Because stocks, they go better and you can make more money through the years. Okay, guys, it's 1 hour 41 minutes. I have been speaking for 1 hour 41 minutes non-stop. So I should end this session. Please be careful and be ready for any news this week. Because this week we have a lot of news. Tomorrow maybe there is the impeachment of Donald Trump if they accept it. Maybe yes, maybe no. There are a lot of news coming for President Trump. Maybe he will resign. Maybe there are other problems. So be careful of the market. It can change. The market trend can change at any moment. So be careful. Okay? So thank you very much, guys, for coming and for speaking and asking questions. And Hassan Qasimi said, have a great night. Thank you very much, guys. If you need me, you have my email. You just send me an email. I will answer you back tomorrow or whenever I have time. You can also use Facebook. You put my name and you find my Facebook. You can send me a message. It's very, very quick. It means whatever you want, I am near you. Thank you very much and have a nice night.